Now, you've just released your third quarter results. Looking at the same time last year, you're slightly up by about 1% in economic times that have been described as very difficult for the banking sector in East Africa. Tell us, how has the first 9 months of this year been for Kenya Commercial Bank?
The first 9 months for KCB have actually been pretty good. And I say that because the operating environment has been very, very challenging, difficult. The overall economy reporting fairly low growth rates. We've been seeing figures anywhere between 1% and 3%. So in that environment for KCB, we've been able to grow our loan book by 30% and achieve a profit before tax of 5.3 billion shillings. Within that number, one has got to disaggregate it to see what the real performance is. If you look at the top line and look at the income lines, we've actually grown by 36%.
Now, one of the most notable events around KCB is the expansion plan of branches, not just within Kenya, but in 4 other countries across the wider East African region. Give us the latest on this expansion and specifically on how much the regional networks are contributing to the growth of profits of KCB.
Yeah, this year we are very excited actually because we hit our 200th branch in the region. We now are up to something like 206 branches across the region. The bulk of them in Kenya, of course, 167. The other countries, the youngest in our empire, so to speak, which is Rwanda, has 9 branches now, and the other 3 have almost a similar number of branches. Sudan has got 6. Tanzania 10, Uganda 12, etc. So we've seen that the expansion program has been very successful this year. What it means though is that because of that expansion this year, the cost that we've incurred in that expansion program hit us this year, and hence that 26% growth in costs, because part of it is related to that expansion in our network. But we see a situation where that expansion is an investment that is going to continue to begin to give us returns as we go forward into next year and the year after.
You've talked about recapitalization earlier this year, a mix of debt and equity. You've just come out of a rights issue. What other areas are you looking at in terms of raising capital?
The rapid growth in our balance sheet and in our loans, for example, needs a constant look at our capital. Today we have a fairly strong capital base, 22 billion shillings of capital. The ratios are consistent. We are achieving all the capital adequacy ratios as defined by the regulators. But we are fairly close to that threshold. So for us to move to the next level, we actually need to begin to look at that. And so our board will be looking at that fairly closely as we go into the new year.
Still looking at the expansion plan across the region, cross-listing was one of your strategies. You've now cross-listed in Tanzania, Uganda, as well as Rwanda. What impact has this had on brand visibility in those countries?
The benefits we've seen from that is obviously that the awareness of KCB as a brand across the region is now much stronger than before we did that. Because every day in each of those markets, people see the name KCB on the board somewhere. Investing in stock markets across East Africa is a new thing. I mean, it's very strong in Kenya. It's less stronger in the other territories. There's a whole education campaign that stock markets have got to do to get citizens to appreciate what investing in shares is, and this is something that is going to be continuous. So I see that the move towards cross-listing is one that is beneficial. The transactions are not great in those markets yet. Some of the players in those markets still instruct their brokers to actually come and buy on the Nairobi Stock Exchange, so we don't actually see the statistics in those markets. They actually happen in Nairobi. But going forward, we expect that those volumes will begin to improve.
Now, we've seen a shift in the way East African banks operate, and recently you've announced a plan to merge SNL, which is your mortgage subsidiary, to the main banking platform by 2010. What's the latest on this, and what are the immediate benefits you see out of this merger?
The key benefits is really rationalization of the 2 operations, running one company but different products. Our mortgage product is very strong. We want to continue to grow that business. There are synergies that the two institutions will enjoy. The S&L will begin to enjoy much, much more the strength of our large branch network. And equally, as we roll out the mortgage product in other countries, we'll be using the same expertise rather than setting up little S&Ls in Uganda, in Tanzania, in Rwanda, everywhere else. You know, our branch network will be able to do that, to offer that product.
Now, looking at your balance sheet, and as you mentioned earlier, your loans have grown by about 30%, while reports recently say that banks are being a bit more conservative in terms of their lending. What is the position of KCB going forward?
We are in the market, and our business is providing financial solutions for our customers, you know. And we run our business on the basis of growing our balance sheet. So we're growing our deposits and strategies for doing that. We're growing our capital base through the profits that we make. And in turn, we are growing our loan book because of the funds that we have. And we will continue to look for suitable opportunities. Obviously, we are mindful of the economy and what's happening in the economy, and therefore we'll be targeting sectors that we see growth opportunities in, and working towards giving the sort of loan products that are appropriate for those sectors.